When you think about financial independence, what comes to your mind? Is it about having the options to travel wherever you like and whenever you like, not having to worry about taking time off work, having enough money in your bank account that you can pursue the activities that you've always been passionate about, but perhaps the money might have been an issue so that you couldn't actually go after them? Or even better, maybe having enough money to help those that you would like to help, those charities that you care about, the family members that need support, and so on and so forth. Well, when it comes to me and my wife, it's a combination of all of them. It's about that freedom. It's about having that empowerment and option and choice. And the fact that we don't have to necessarily and constantly work about how we are going to make money, but having that option that the money is in there for us. In better terms, the money itself is making more money for us by having made some of those smart investing and financial decisions. My name is Mo, and in this video, as part of my YouTube channel, Momentum Finance, I'm going to be talking to you about how my wife and I are building a stock market investment portfolio with the goal of reaching financial independence and financial freedom in the years to come. The portfolio that we would like to help us sustain our life and help us get to that early retirement stage. Our investment portfolio is mainly invested with two major brokerage accounts. The first one is Wealthsimple Trade, that accounts for majority of our investments. And the second portfolio that we have is with Questrade. Now, with Questrade, we only have a smaller portion of our portfolio. We've intentionally kept it that way because we wanted to have our Smith Manoeuvre portfolio with Questrade, given the features that it has, as well as some of the limitations that Wealthsimple Trade account currently has, such as not having the option of having multiple non-registered accounts with Wealthsimple Trade. That was a limitation that stopped us from bringing over our funds to Wealthsimple. But if in future Wealthsimple offers that option and allows people to have more than one non-registered account, you can rest assured we will probably move our funds from Questrade to Wealthsimple Trade. I'm going to today walk you through our portfolio, talk a little bit about what have been the stocks and ETFs that we purchased in the past week, and what's our game plan for the stock market in the week ahead as well. All right, we're going to be taking a quick look at the portfolio that we have here with Questrade. This is our Smith Manoeuvre portfolio, currently showing a size of $102,288. For those of you who have been following our journey, you know that for our Smith Manoeuvre portfolio, we've only landed on currently one holdings, and these are all invested in the shares of 𝗖𝐋𝐈𝐖, Vanguard Investment All-in-One ETF, which is available through Toronto Stock Exchange. This is a all-in-one basket ETF, which as a result of that, it gives us full diversification across markets and gives us exposure to the US, Canada, international markets, as well as emerging markets. The last trading price for shares of 𝗖𝐋𝐈𝐖 was at $34.34. You do see how the shares of 𝗖𝐋𝐈𝐖 have performed over different time frames. For example, in the past 1 month, it's up by 1%. Past week, it was down by about 1%. The past 3 months, it was showing to be up by just about half a percentage point. And the past 6 months, up by close to 7.7%. And in the last year, it's up by approximately 4%. Now, for us in this portfolio, we have a total of 2,978 shares of 𝗖𝐋𝐈𝐼. Our average share price is at $33.98. Currently, this portfolio is showing to be up by about 1%. Moving on, we're going to take a look at our portfolio that we have with Wealthsimple Trade. For the sake of this video, I'm focusing only on the accounts that I have personally with Wealthsimple Trade. In my non-registered accounts, we are showing a total balance of close to 178,000. RSP account showing a total balance of $21,500 in Canadian, as well as $14,000 in US dollars account. For my tax-free savings account, it also consists of both Canadian and US dollars accounts. We have approximately $57,000 invested in Canadian stocks and around $5,000 in US dollars, ETFs or stocks. We're going to be walking you through it in a moment, but all in all, the total value of this portfolio currently is sitting at around $283,561. The value of the portfolio is down compared to last time we provided an update, and mainly is that the last week's stock market didn't do as well, and as a result, that is also reflected in the value of these portfolio. We are in here for the long term. We are very happy and pleased with our diversification that we get through these passive high quality exchange traded funds, and we're not panicking or worrying at all about any of the market pullbacks. In fact, those provide an excellent opportunity for us to add more to our high quality positions. And last week we put in another $1,000 into a non-registered account and used that entirely to buy shares of the high quality ETFs that we have. And I'm going to be walking you through it momentarily. So if I go back to the activity section of this portfolio and just focus on the buys, let's see what stocks we bought last week. You do see we had some fractional shares of VFE. We also bought shares of 𝐋𝐈𝐖. We bought 4 shares here. We also bought another 5 shares earlier on during that same day. We bought a few shares of XEF, 5 shares in here. We bought as well in fact 2 shares of VDY here that you're pointing out. And in a moment, I'll walk you through exactly what these ticker symbols stand for. But just for the sake of argument, you notice what shares we bought. We did definitely buy some additional shares of VFE, which is the Vanguard S&P 500. We bought 5 more shares as well here, as the values of shares of VFE definitely had a little bit of a pullback. If I go back to our portfolio and start off by showing you the holdings that we have in our non-registered account, it mainly consists of shares of VDY at around $93,000 invested, currently up by about 0.5% in here. We have shares of VFE, which accounts for about $65,000 invested, up around 5.6%. XEC is another holding that we have here, which is BlackRock Canada iShares Core MSCI Emerging Market. As the name suggests, we are getting exposure to the emerging markets. We have 97 shares in this account, up. In fact, this one is down by close to 0.7%. XEF gives us exposure to international markets. It stands for iShares Core MSCI East and Far East IMI Index ETF. With XEF, we are showing to be up by about 11% plus. XEF does pay dividend distributions. It has a yield of 2.65%. With XEF, similar to XEC, your distributions are paid only on a biannual basis. Next, we also have some shares of 𝐋𝐈𝐖, which is up by about 1.5% in this account. If I switch my accounts and move on to shares of tax-free savings account, on the Canadian portion of it, we have similar type of names, including VFE, XEC, and XEF. We also have shares of XUU. So for XUU, it stands for BlackRock Canada iShares Core S&P US Total Market Index ETF. The difference between VFE and XUU is that VFE focuses only on the 500 largest companies in the S&P 500, Standard & Poor's 500 index, whereas XUU covers the entirety of the US stock market. We currently have around 457 shares of XUU, or about $19,000 invested. It's down by just a fraction of a point, 0.18 percentage point. And other shares that you see here we have. On the USD front of this account, we only have still 29 shares of Tesla. It's unfortunately down currently by about 11%. We are just waiting for the shares of Tesla to come back and recover from its current state. And once it hits some decent positive returns, most likely we're going to sell our shares of Tesla and use the funds to invest in index fund. With our Wealthsimple Trade portfolio, we are mainly interested in passive high quality index funds. For moving on and looking at our RSP account, on the Canadian portion, we have only 2 shares, VDY and VFE. With VDY, we have close to 6,500 invested. It's up by 2.3%. And with VFE, we have close to $15,000 invested. It's up by 5% plus. And on the USD front, in our registered retirement savings plan, given that there is a very good tax treatment in our registered retirement savings plan when it comes to US investors, when it comes to withholding taxes, you do notice we have shares of VT and VTI. VT is Vanguard International Equity Total World Index ETF. We have close to $7,000 invested in USD. It's up by a fraction of a point. And the other big holding is VTI, Vanguard Total Stock Market ETF. It's invests mainly in the entire US stock market. And that's the main exposure for VTI. We currently have around $7,400 invested in it. It's down by just a fraction of a point, 0.11%, which is just okay. We've recently started this portfolio and these holdings, and this is definitely a game plan for the long term. Our plans for the week ahead, given that I've already pretty much maxed out my investments and additions to RSP account and tax-free savings account, the focus for us would be mainly in our non-registered account. We are envisioning and anticipating to collect some dividend income from VDY because VDY does pay its dividends on a monthly basis. And I believe the next dividend payment is in early May. And as we get those dividend income, we are going to be using those funds to buy some more shares. Most likely, we're going to be buying shares of other accounts that we have in our non-registered accounts, such as the VFE, 𝐋𝐈𝐖, and 𝐋EF. Main reason behind it is that we want to balance out our asset allocation. Our game plan is that we get about 50% exposure across our accounts to US stock market, around only 15% or so to Canadian stock market. Right now, our exposure to Canadian stock market is massive. I believe we have close to 42% exposure to it. We're just trying to bring it down, not necessarily by selling any of the ETFs that we have, but rather as new money is put into account, as dividend income is earned, we want to use that funds and buy more shares of emerging markets, international markets, and US stocks. That's the game plan. And mainly, as you notice, it's done through the passive investing through these high quality index funds. The reason behind really exploring passive investing as opposed to active investing is that based on the body of research that is out there, as well as the risk tolerance that investors get over time, for me and my wife, we are leaning towards passive investing, set it and forget it kind of approach to investing, and not having to worry about doing a ton of research in terms of stock picking, which in many cases it's really could be based on a lot of luck and maybe for lack of a better term, not a true science of really knowing what's going to happen with the stocks. Whereas by investing passively, we are kind of spreading that risk across multiple sectors, across multiple geographies, and in many cases across thousands of businesses and companies that are considered high quality and a part of the overall market. We are happy with earning the average returns from the market and not really in the business of trying to beat the market. Well, thank you so much, everyone, for watching this video until the end. I hope you found it beneficial and gained you inspiration and momentum to also get started investing in the stock market and working towards reaching financial independence. As always, if you enjoyed this video, please don't forget to give this video a thumbs up and subscribe to our channel for more videos about finance and investing. And thank you so much, and I hope to see you all next time.